welcome to Leaders of Tomorrow, 18 special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. On the show today, I have a special conversation with V. Balakrishnan on how to make yourself more investment ready. And on Bright Sparks tonight, we feature Vizag-based Bhavani Underwater Services. So that's what we have in store for you tonight. Let's start off right away with our Inside Conversation. He has the distinction of being the CFO of one of India's biggest IT companies, Infosys, and steering Infosys, in fact, through a rather difficult period. His present avatar is one of a venture capitalist and mentor to startups, particularly in the technology space. I caught up with V. Balakrishnan, the former CFO of Infosys. He's now with Xfinity Venture Fund. Take a look at what he had to say to me. I want to kick this interview off by asking you what advice you would have for MSME entrepreneurs given your own entrepreneurial experience.
So India has created a huge IT industry, so $140 billion IT industry, and a lot of people who worked in the industry, who worked in the enterprise space for a very long time, and they are all becoming entrepreneurs. And I think today funding is available, the ecosystem has developed well, even the government has understood the benefit of supporting MSMEs, because globally MSMEs are the biggest employment creators, and even in India it is becoming so. So the government has realized that and brought the startup policy, which is very good for young entrepreneurs. Today there are close to 20,000 startup companies employing more than 300,000 employees. So I think it's a great time for MSMEs, great time for entrepreneurs, and I think India will recreate the magic of IT industry in the startup ecosystem.
You're talking about the IT industry. You've of course been very closely associated with that industry in your previous stint as the CFO of Infosys. Specifically for the tech industry, what advice would you have for someone who's either already in the space or looking to enter it?
No, I think today's software is defining everything. Even in the hardware space, the hardware is getting more and more commoditized. Software is creating a lot more differentiation. Even if you take automobile today, I think the differentiation for auto companies comes in the form of software. Tesla is a software company, not an automobile company. So I think the software defined hardware is a great phase, because it is a intersection of hardware and software, where software will improve the capabilities of hardware and make the hardware agnostic. So I think if you are even a hardware company, if you can use the software to create a software defined hardware, I think it has got a huge market value and opportunity.
So how does a company go about ensuring they bridge the gap really between skill availability and what need they have? Is investment into talent by companies really going to be the only solution according to you?
No, there is a long term problem, there is a short term problem. Long term, you can build internally the training capabilities so that you can hire the raw talent, train them and absorb them. In the short term, I mean, you have to pay a higher cost to get the talent, because talent is available at a cost, and in the short term it will increase your cost, but so be it. There's no solution to this.
One area of business that you've handled very closely, of course, is the entire regulatory environment. How difficult is it as far as regulations and the regulatory framework goes, in your opinion? There are a whole host of such regulations that exist for the tech industry. What advice would you have for an MSME entrepreneur in this space?
If you look at the regulatory environment in India, the government has finally realized that a lot of value which is created in the startup space is going outside India. Most of the companies are incorporated outside India. They're creating value outside India. That's why I think the new startup policy is very important, where they relax some of the regulations both on the taxation front and also on the incorporation front, and made it easier for startup companies.
You're talking about the startup policy. The government, of course, is going all out to woo companies with both the Digital India and to some extent Make in India. Now, what some of the larger companies give us to understand is they yet to see the benefits of that really coming in on the ground. So how do MSME entrepreneurs participate in this, and B, have they really started seeing the benefits really coming out of these policies?
I think the policy has come out very recently. It will take some time for people to digest that and realize the benefit. But I think it is moving in the right direction. For example, MCA, they clearly said they will try to incorporate the company within a month. If you go to US, in Delaware, you incorporate a company within half a day. So I think the move is towards the right direction. There's always a mistrust on the government because we have seen the regulations impacting the businesses all along, and I think the government is moving in the right direction. Let's hope that it will change, and I think once people start benefiting from the new policy, they will realize that it is moving in the right direction.
In your new role post Infosys, you of course are someone who invests in companies. From that perspective, what advice would you have for MSME entrepreneurs looking to raise funds? Most of them who write in to us or call us ask us how they go about the entire process of raising funds. Should it be banks? Should it be VCs? At what stage should they approach each of these? And how do they really make themselves ready when it comes to receiving such investment? What advice would you have, sir?
Today, the alternative form of financing is getting available. For example, there are a lot of P2P marketplace where they connect the borrowers and lenders, which makes it easier for MSME companies to borrow. So I think the financial system itself is evolving and changing, and that will benefit the MSME companies. If you are talking about equity financing, I think first of all you need to have a great idea. And what we see lacking in many of the MSME companies is their ability to market, the ability to impress upon the venture financing community.
So you're talking about, Startup India. We're talking about also financing as far as MSMEs go, where the government has set up, funding through the Mudra Bank and the Mudra Bank, of course. So do you think there's a strong case for a separate regulatory environment when it comes to MSMEs, whether it's legal, whether it's policy framework or funding?
No, I don't think you need a separate framework for that. I think the government should push the banks to lend more to MSMEs, even if it is not with collateral and taking a little bit of risk. Because today the banks have become too risk averse, and that is impacting the funding for MSMEs. So if they become slightly more liberal, because at the end of the day MSMEs are going to create more jobs in this economy, and job creation is the biggest issue for the government. So I think government should push the banks like they did with the priority sector lending. If they push the banks to fund MSMEs more, I think that will help.
Let's talk about the talent availability in India right now, sir. Whether it is for a large company or a smaller company, I'm assuming that finding skilled labor is a huge issue. I remember a survey that NASSCOM had put out a few years ago where they said only 25% of all people coming out of universities are really employable right now. These MSMEs who write in and call us ask us about how they go about finding the right talent and how much one should really put in terms of a cost when it comes to hiring the talent and retaining it. What would you have to say?
I think talent is a bigger problem, whether it's for MSCs or large companies, because the educational institutions are not creating the right talent for the industry. That is where the reskilling has become very important. If you look at large companies, they absorb the raw talent, they train them internally and use them internally, so they solve the problem. MSMEs have got a challenge because they don't have the training capability to reskill those employees and absorb them. So there is a need to create reskilling institutes which will help the output to match what the MSME wants. There is a cost factor, of course it will impact the MSMEs, but there is no running away from that, because the talent availability is the biggest problem for any industry today, and not only for MSME industries. So I think retaining employees, MSMEs have to change the way they structure the compensation.
Are a lot of funds really going into companies that are in the tech slash online slash e-commerce or mobile space, in your opinion? You, for example, at Xfinity also look, of course, at the entire manufacturing space. Just talk to us about, how funds are being deployed right now.
No, I think in the initial stages, most of the VC money went into consumer tech because that was a huge space, and a lot of big players came in. It's a winners take all market, but there are some challenges there because none of the companies had built a sustainable business model. So they focus mainly on market share, not on profitability or returns. If you look at the recent VC funding, most of it is going towards enterprise solutions, whether it's hardware or software defined hardware. Because the enterprise space, the funding requirement is small. It's not like the consumer tech. It's not a winner's take all market. So even 2-3 companies with similar kind of ideas can coexist. And also a lot of recent exits has happened in the enterprise space. And even if you look at the talent, most of the talent has come from the enterprise space, because all the large IT service companies, they predominantly worked in the enterprise, and those talent is coming out and becoming entrepreneurs. So I think most of the recent funding is going towards B2B businesses which are in the enterprise, where talent is available, the funding requirements are not as large as consumer tech, and also exits are happening in the space.
Before I let you go, what's the latest at Xfinity that you can talk to our viewers about?
Xfinity, we are closing our second fund. As you know, our first fund was a 125 crore fund. We already invested in 9 companies. That fund is full. Now we started the second fund, which is a 250 crore fund. The investment philosophy space, everything is same. Because the demand was so high, because we got a lot of interest from institutions, HNIs, family offices, we are planning to increase the fund size from 250 crores to 300 crores. We are also planning to float an offshore fund, which could be somewhere between 100 to 200 million dollars, maybe in the next few months. So I think we find that the enterprise space is very promising. We invested in fabulous companies both in India and outside India, and even investors appreciate that, because we are the only one which is focused on B2B space and not more on the B2C space, which we believe in the near term is going to create a lot more value to the investors. And we are seeing a lot of traction from the investors too. That is clearly visible in our increase in fund size from 250 to 300 crores for the second fund. So I think it's a very exciting space, exciting opportunity. We are seeing a lot of deals happening in this space, and we are very excited about it.
Let's take a quick break. On the other side, I bring you up to speed with Bhavani Underwater Services. When it comes to modern day infrastructure projects, what happens on the ground is complex, yet visible to the naked eye. Today though, we're taking a closer look at a company that tackles underwater infrastructure challenges. In fact, underwater services is a niche but a steadily growing market, one that is seeing nearly 12% growth year on year globally. So what happens when it comes to underwater pipe laying, drilling, as well as the underwater repair of ships and rigs, and what really happens below sea level? Pooja Jain finds out. She was in conversation with Sri Bhavani Underwater Services in Visakhapatnam. Take a look.
So walk us through your growth story. How did you come to develop such a stronghold in a niche market like underwater services?
We started this diving company in 1978. It's not particularly me, my father and his colleagues. They were divers in Indian Navy. So they came out of Indian Navy, they retired, and they started this in 1978. So the next generation we have taken over.
So underwater services, broad term. Let's dissect that a bit. We just want to get a sense of the range of projects that you undertake at the company.
Conventional ones will be a video inspection, where a ship has a certifying body. So just to check how seaworthy the ship is. So we are a medium between the owner and the certifying body. The certifying body can have a look on the surface how the ship's condition is, but he cannot go underwater. So that's where divers come.
So how do you go about talent acquisition in your business?
There are ex-Navy, there are divers who have been trained by us only. The training period is say 1.5 or 2 years. We train them in our premises, we take them to nearby premises, and then on site, on job also. So we train them, we look at their skill levels and everything. They undergo a technical interview just to know that okay, they are at our level and everything. Then we intake them.
Who would you consider your competitors to be?
There are many diving companies here in Visakhapatnam who have gone out from this office itself and established their own companies. So, and on a commercial terms, they are working at the rates which we used to quote, say in 90s or early 2000s. So they are working at those rates, so which we cannot compete and everything. We have a goodwill and we maintain that goodwill. So even though there is competition in the market, we are sustaining the pressure and everything and keep on going on.
Macroeconomic factors such as the fluctuating price of oil and losing trained talent to more lucrative opportunities abroad have a serious impact on the domestic underwater services business. So what are the opportunities and challenges facing this industry?
Well, help me understand the sales cycle in this sort of business. How do you close the client? How do you source the client?
ONGC is the main contract here, Reliance is the main contract here, GSPC is the main contract. So we know who has got the contract and everything. It's indirectly that the certifying bodies are advertising us. It's not like we go and advertising ourselves. We go and advertise to the offshore companies, like I mentioned earlier, and try and gain the contract.
Well, then help me understand your client mix a bit better.
The repeat clients are like Shipping Corporation of India, with whom we have been working since the company has been established. The main clients which Bhavani Underwater Services had till 90s or even say late 90s was government sector only. Our competitors have brought down the rates and everything. So we have stopped entertaining or we can say even approaching public sector companies.
What role has technology played in the evolution of your business?
Mainly in Europe and US and even Dubai or Singapore, they keep on bringing new equipment and everything in the market, which is very much required because time is money. So we try and import them through checking who has got the best equipment on the net and import. That's it.
And then does educating the domestic market on your capabilities sort of pose a challenge for you?
This is a very good question because domestic market doesn't have, or you can say they have very less knowledge about diving. Foreign companies or foreign clients, they respect the divers.
Talk about some of the contracts that you currently have underway.
There is a company, US based company, which is known as Transocean, who have got oil rigs all over the world. There's another company called Vantage Drilling, who have got oil rigs all over the world. And we have even worked for Reliance, we have worked for Care, and they have got a oil rig over here on the east coast. So that's how we are marketing ourselves.
And what's next on the frontier as far as underwater services? Where do you think the industry is headed?
To be frank, as of now, the industry is very down because the oil prices, global oil prices are down. It's nearly about $50 a barrel. Right. So actually, we were trying to expand our business by going nearest to the client. Like we tried to open an office in Kakinada. We set up an office in Kakinada, which is the nearest oil and gas hub to us, where our major clients are. Otherwise, other than that, we are trying to open offices, might be in Gulf or wherever we can get a good, a partner over there, and just let us see how it goes.
Shri Bhavani Underwater Services is the story of a family of ex-naval officers leveraging their skill set to carve out a creative and commercially viable enterprise. We had the opportunity to witness their expertise in action firsthand, both offshore and on.
With that is a wrap in this edition of Leaders of Tomorrow. We'd love to hear from you. Do write into us at leadersoftomorrow@timesgroup.com. You can call us on the number which is on your screen or reach us on social media using the hashtag LOT. Thanks for watching.